Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives shaping the global investment landscape. Through 2022, we heard recession chatters. As we go into 2023, these have only increased with two distinct groups of consensuses developing. According to the first, the global economy is heading for stagflation, where growth remains below trend and inflation above trend. The second group, however, sees inflation trending sharply lower but at the cost of a recession. As we've been arguing, we are in neither camp. We see this episode for the global economy as one of an asynchronous mid-cycle slowdown rather than an outright recession. Dealing with the asynchronous part, we believe that the economic performance of the global economy will be based on divergent performances from underlying regions. For instance, growth acceleration for Asian economies and a mild recession in Europe remains our base case, also with US growth weakening but still avoiding a recession. This divergence should also be visible by sectors. While the global trade value is likely to fall over the next 12 months, domestic consumption could stay resilient. To assess the recession probability in the US, we use our proprietary recession probability indicator, which our regular listeners should be familiar with. Our recession probability indicator, RPI, which quantifies the probability of a recession in the US over the next 12 months, currently stands at 55%. So far this year, the RPI rose 27 percentage points from extremely depressed levels. During 2022, the global economy faced a range of headwinds on growth, inflation, policy, politics, and geopolitics. All these are fed into the expectation for slower growth and the rising probabilities of a recession. To put these probabilities into context, it's important to compare the current levels of our RPI with its own history. Such comparison reveals that a 50% level on the RPI does not always imply a recession. For example, during 2013 and 2016, RPI rose above 60%, but both episodes did not end in a recession. Similarly, we still see a chance of the current episode ending in the mid-cycle slowdown rather than a recession in the US. Of course, the window for a soft landing in the US has been narrowing in recent months, but it is still not impossible. Looking ahead, key levels to watch on our RPI are 60, 70, and 80%. A 60% level in the past coincided with the start of a recession. However, as discussed previously, there were two exceptions, both in the previous cycle, where a recession did not materialize despite the indicator moving above the 60% level. A 70% level on our RPI confirms a recession without any exception. A peak level of above 80% for the RPI indicates a deeper recession. Only the recessions of the 1980s and the global financial crisis of 2008-2009 have seen our RPI move above an 80% level before falling. It's worth noting that RPI tends to rise during the mid-cycle slowdown of an economic cycle but falls quickly. Elsewhere, as we indicated earlier too, the recession chances are the highest in Europe and the lowest in Asia. Even in Europe, the economic reality appears to be better than downbeat expectations. For instance, Germany, Europe's largest economy, recently released its revised estimate of Q3 GDP, and it was better than the initial estimate announced in late October, which was also better than expected. While backward-looking Q3 growth does not mean Germany will sidestep recession in the next 12 months, economic reality has been faring better than most anticipated. This is also reflected in the overall global economic surprise indices, which have stayed positive for 3 months in a row now. The even better news is that inflation surprises, although still elevated, have been trending down constantly and have recently hit the lowest level since April 2021. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information, please reach out to your contact at ADCB or log on to our website at www.adcbam.com. My name is Kishore Muktinutalapati, and I'll be back next week with another episode of Global Investment Insights.